Welcome to Financial Alley. Today's video is about prepaid expenses. How is prepaid expenses treated in accordance with GAAP? What is a journal entry for prepaid expenses? Journal entry for the monthly adjustment of the expense from the prepaid. Is prepaid expense considered a current asset? And how to record this prepaid expenses using Tally Prime. Let's go in detail. What is prepaid expenses? Prepaid expenses is actually an expense that is incurred by the company, which is paid in advance for a certain period of time, and its benefits are actually utilized over a period. That means a company will have a lot of expenses for which it pays in advance, and its use is not only limited to that financial year, but will be extended to the coming financial year also. For the expense that is used for that particular financial year should only be appearing in the books of accounts, like in the profit and loss and in the income statement. The amount that is paid in advance for the period which is reflecting for the next financial year should be seen under the current asset of the balance sheet. The prepaid expenses are recorded as an asset under the current asset as their benefits are used in the future. It is not considered as an expense until and unless it is consumed. The most common examples of prepaid expenses are rent, insurance, subscription for softwares, lease agreements, etc. And how is the prepaid expenses treated according to the GAAP principles? This GAAP principle is the standards that is brought by the US. It is generally accepted accounting principles on which the bookkeeping and accounting system actually works. As per the generally accepted accounting principles, the expenses should be recorded in the books for the same accounting period for which the benefit is utilized. The GAAP matching principle prevents the expenses from recording in the income statement before they incur. That means only the expense that are utilized for that financial year should appear in the books of account for that financial year, or monthly that has to be recognized according to that particular month or year only. Any expenses that is pertaining above the financial year or not belonging to the financial year should be separated from the books, though it is paid. Once expenses are incurred, the prepaid asset account is reduced and subsequently a journal entry is made to the expense account on the income statement. This is better explained in the coming slides. This can be better understood with an example. ABC company is having a financial year from 1/1/2023 to 31/12/2023, and it enters into a 1-year rental agreement for an office building from Miller's Real Estate Company. The agreement is for $240,000 per annum. That means monthly $20,000. And the period of rent is from 1/7/2023 to 30/6/2024. That means the financial year for ABC company is January 1st, 2023 to December 31st, 2023. The payment is actually made for a period of 12 months. 6 months belongs to this particular financial year for which the books are prepared, and the balance 6 months belongs to the coming financial year for ABC company. So the books of accounts at the closing date of 31st December 2023 should reflect 6 months of rent in the profit and loss and the income statement. The balance 6 months has to be seen in the balance sheet under current asset. And the prepaid period of this rent is January 1st, 2024 to June 30, 2024. Now let's see what are the journal entries that separates this payments. We use the same example. ABC company having a financial year from 31st January to Jan 1st to December 31st, enters into a 1-year rental agreement for an office building from Miller's Real Estate Company. Agreement is for $240,000 per annum, that is paid in full, and that means monthly $20,000. Payment of rent is paid for the period of 1/7/23 to 30/6/2024. So when the payment is made, the journal entry goes like this: 1/7/2023, rent for the month of July has to be appearing in the books for the month of July. So rent expense account debited $20,000. The balance amount, it goes to the prepaid rent. That means the rent will be utilized in the coming months. So unused rent will appear in the prepaid rent account. That is $220, and to cash or bank, whichever mode of payment that the company chooses, either cash, bank transfer, or check. You can mention in this to cash or bank. If it is bank, mention bank, which bank is your company doing. To bank, then $240,000. That means the company will be paying the entire $240,000, and $20,000 will be for the particular month of June. And prepaid account $220,000. The narration is being rent for the month of July, $20,000, and prepaid rent is $220,000 is paid. And what is the effect of this entry is, in the profit and loss and the income expenditure account, 20,000 will be shown as an expense for the month of July. That means in the month of July, we will be utilizing the first $20,000, and in the books of accounts for profit and loss, it will be appearing rent expense as 20,000. The balance 220 will be shown under the current asset of the balance sheet. Current asset appears in the asset side of the balance sheet of the company. And as on 31/7 or as on 1/7/2023, this figure 220 will be shown as current asset. Okay, in the coming months, like in August, September, October, we have to make an adjustment entry which will reduce 20,000 each from this each month from this 220 until December 31. So every month 20,000 will be added to the expense account as the month comes by. And subsequently, when you pass this entry, we make a cash of 240,000 payment for millers. So cash will be reduced by $240,000 because the entire 240 will be debited from the cash. For 240. Next, the adjustment entry would be passed for every month. That means from July already we passed in this entry. In August, we make a entry every month. August, September, October, November, December, we make this entry till 31st December, so that every month this 20 has to be added onto the expense account. So in the month of August, we make this entry as rent expense account 20,000 debited to prepaid rent account 20,000. Being rent expense used for the month of August 2023, adjusted from prepaid expense. So this entry is repeated at the beginning of the month till December 31 for the closing of the financial year, Jan to December 2023. For the that financial year, this entry will be repeated every month. The effect of this entry would be 20,000 will be added on to the expense account, and 20,000 will be reduced from the prepaid rent account. Likewise, for every month, this rent expense will be adjusted from prepaid. At the end of the year 31/12/2023, the profit and loss will show a total of 120. That means 20,000 into 6 months. 6 months is July to December as rent expense, and the balance of 120, which is belonging to the next financial year but paid in advance, will be reflected in the current asset of the balance sheet of ABC company as on 31/12/2023. So this means 120,000 is the actual expense consumed by the company on its accounting period or financial year, which ranged from January 1st, 2023 to December 31, 12, 2023, and the rest $120,000 is prepaid for the next financial year, and it will be reflected under current asset of the balance sheet. Next is prepaid expense considered a current asset? Yes. All this video we say about the current asset as prepaid expense would be shown under the current asset. Prepaid expense is recorded as a current asset. Current assets are the assets that a company plans to use it or sell it within a year when they are going in liquidation or when they wanted to have some working capital. Current asset is the one which they look for. They are actually short-term assets. They are in short-term nature. Most often this is where the prepaid expense line item is recorded as it is short-term in nature. Any prepaid expense that is not used within a year, then it will be considered as a long-term asset. Anything which is above 1 year will be seen as a long-term asset. Within a year it is current asset.